Good morning, everybody. Welcome to the Flow Show. Here we are, maybe a bit of a quiet day today since it's a US holiday. So all them lot will be stuffing their faces with pumpkin pie and turkeys and God knows what in their pre-Christmas practice round. Hope you're all doing well. Kay, you digging into any turkey yet?
Good morning, Ryan. Good morning, everybody. Happy Thanksgiving to the turkey stuffers. But no, mate. I mean, what really surprised me is that half of the Americans are already putting up their Christmas tree. I mean, it's crazy.
Shocking scenes.
Yeah, it's a bit of a shock. Nah, nothing of the likes at Case Place yet.
Not even a turkey sandwich from your local Pret, no?
Oh, maybe, but that's not part of the plan anyway right now.
No, no, exactly. I know what your plans are, Mr. Majestic.
Yeah,
Right,
absolutely.
let's get stuck into it. Go long, Majestic shares before close of business today, folks. Hashtag not a trade reco. Right, let's get stuck into it. Japan, apparently their tax revenue is going to hit a record high in this current fiscal year. As one thing that I explained right at the start of all these wage hikes, that obviously the hope is that higher wages leads to bigger tax intake because they're going to be taxed more on the higher amounts, and obviously also spending and that sort of thing. This virtuous economic cycle that they're trying to instill over there. So touch wood, it seems to be working. So we're getting higher tax revs from all these wage hikes, which are going to be hopefully continuing next year as well. Over at the RBA, Governor Bullock says that underlying inflation is still too high to consider a near-term rate cut. But then she said we will consider rate cuts if CPI keeps moving as expected. If inflation falls more quickly than forecast, the board will respond. But also if data suggests inflation is picking up again, that would be a big red flag for us. So playing both sides of the net as always, but a bit more even on the hawk dove side of things. So just as much talking about cuts now as they are talking about sticky inflation and maybe having to keep rates restrictive or even hike again. So it's subtle shifts in language, but we're no closer to a cut just yet. RBNZ's Silk says we expect to cut rates further this year, and a rate cut of either 25 or 50 will be on the table for February. They have touted at their meeting this week that, Governor Orr did that a 50 is in their forecasts, but Silk may be opening the door that they might go less than that. They are expected to cut rates if we go by their own neutral estimates of 2.5% to 3.5%. So that's 75 or 175 more of cuts by the end of 2025, or to get them to their neutral rate. So if they go 50 in Feb, that leaves them 25 to get to their highest level of expectation for neutral. So we'll have to wait and see. They might start slowing down in February. We will see. Bit of data out. Oh, let's give it the old graphic. I haven't got rid of that yet. There we go. Data out this morning. A lot of CPI coming out. Spanish CPI confirming the uplift. CPI coming in a pip higher than expected at 2.4%. The Eurozone measure HICP coming in as expected, confirming the jump of 1.8% from 1.8%. We got the German regionals as well. They're all coming in higher, apart from North Rhine. So by varying degrees, Baden-Württemberg up a pip, Bavaria up 2, Brandenburg up 1, Hesse up 2, North Rhine down 1, Saxony up 1. Expectations for the pan-Eurozone number, I think, are there or thereabouts, given what we've seen. HICP up 2 pips, CPI up 3 pips. The month-on-month numbers, there's a little bit of disagreement in our chat room as to whether they're on the money or not, but if they're out by 0.1, it's not going to make a huge amount of difference. So inflation has risen into the end of the year as the ECB, Lagarde, and particularly De Guindos have been touting. So we're beginning to see that, or we have seen that coming in now. The question will be, does it go back down again in the new year? Consumer confidence data out as well from the Eurozone. If I can find it, where we go, it's up there. Well, the final consumer confidence number coming in unchanged at -13.7. The economic sentiment number, that showed a bit of an improvement. Oh, where's it gone? Can't even find it. There we go. 95.8. So a pip up over last month, even though that was a higher revision, beating expectations. Probably the most interesting numbers to look at are these consumer inflation and selling price expectations. The ECB is all about inflation expectations, and both those numbers have taken a bit of a jump, and last month's got revised higher as well. So something for the ECB to keep their peepers on. Still kicking off in Germany between IG Metall and the car firms. The union at Ford said neither Ford Europe nor Germany's management has given any tangible hope for long-term prospects. These guys are still trying to work wage deals, even though the German car industry is in a pile of shite, to put it politely. So that's not a sum that's going to work out well in Germany. In France, over 50% of people want the German. Jesus Christ! Let me start again. Rewind.
Happy Thanksgiving.
Yeah, it is too much turkey. Over 50% of French people want their government to fall, according to a survey. Wasn't even worth the headline in the end, but that just shows the political mess going on over there still. ECB's Lagarde, and we've got a bit of a theme with this morning. She's been urging Europe to negotiate, not retaliate on any trade ruckus with Trump and the US. She said trade wars might be a little net inflationary. She says that Europe could offer to buy certain things from the US and signal that we are prepared to discuss to see how we can reach a compromise. This is a better scenario than a pure retaliation strategy where there is no real winner. An all-out trade war would cause a negative drag on global GDP. Kay, she's stepping over the political line a bit with those comments.
Yeah, her lawyer instincts, and I think also having been at the IMF for quite a while, brought back some urge to chat about things. Yeah, she wants to sit around the table, or she would, let's say, sit around the table. I don't know what the Europeans are going to think about it, but I think it's always like you could advocate for one and the other, but I think if it would be wise at least to have a chat with him. And actually, Rutte has already been talking to Trump last week, I think. So that's I think they will talk to Trump, obviously, and then in a later stage, perhaps feeling the need to retaliate on something like. Add another few percentages on top of the Harley Davidsons or the Southern Comfort whiskey or so. Yeah, it's yeah, and I'm not surprised that she's talking that way, to be honest, herself.
Yeah, she does like to get her nose stuck into political things and loosely tying it to monetary policy and whatnot. But yeah, that's, as you say, that's the lawyer in her. Anyway, moving on to the UK, and those dastardly economists think that the tax hikes from the UK budget may cost 130,000 jobs. That was them speaking to Bloomberg. So take that with the usual pinch of salt. Bit of data from the US as well yesterday. Initial jobless claims, same old, nothing of note there. The only thing, if you want to pick the bones out of it, was continuing claims staying in the 1.9 million. So that's We have been rolling around the 1.8, but it's still just holding that 1.9 million, not a huge number. But maybe we start to see that picking up a little bit. There may still be some, I don't know, some weather-related stuff floating around in that particular metric. But otherwise, the main number, jobless claims, still poking around the 200,000s. So nothing to see there. We got a GDP revision, a bit of a mess yesterday with how these calendars presented it, because within that GDP number, we get the Q3 PC numbers, but we're also waiting on the monthly PC numbers, which got booted to 3 o'clock, even though half the calendars had all this at 1:30 as well. Anyway, GDP coming in unchanged 2.8%. No real changes to any of the other bits and bobs. Durable goods came in up 0.2%, was expected to fall 0.8%, so a decent number there. Some of the core measures as well, stripping out transport up 0.1%, stripping out defence up 0.4%. The more core number, capital goods orders, though, fell 0.2%, was expected to rise a pip, so that was a bit softer there. Then we got the monthly PCE numbers, pretty much bang on the money. Core PCE rising a pip to 2.8%, and the headline PCE coming in as expected 2.3%, pretty much mirroring what we saw from the CPI data. So a little bit of an uplift in inflation, which will keep the 50 wolves from the door, I think, eh?
Yeah, definitely. Definitely. I think I'm on both ECB and the Fed. I'm 25, although there's a lot of voices saying that the Fed may pause. But yeah, no, there's no way the Fed is going to do 50 right now. And even the 25 is perhaps even in doubt. But I still think they will. And both ECB as well. I think ECB will want to keep a little bit of powder dry for when Trump will take the seat, as I've already said. So yeah, I think both 25 is still my base case right now for those two central banks at least.
Yeah, I think I'm in alignment with you, mate. Right, moving over to Mexico. Mexico, their quarterly report kept their 2025 GDP forecast unchanged at 1.2%. And then we're going to get stuck into the tariff stuff. So after Trump's threats, we're already getting a little bit of angst, shall we say, and maybe a bit of folding by some of these countries. So firstly, after Trump's threat, Mexican Economy Minister Ebrard said that the tariff proposed by Trump will cause a loss of 400,000 jobs and reduce growth in the US. So he came out fighting on that one. Then Sheinbaum said that if there are tariffs from the US, Mexico will raise them too. So it all started off, as I say, a bit retaliatory and confrontational from the Mexican side. But then Trump had a conversation with Sheinbaum, and his interpretation was that she has agreed to stop migration through Mexico into the US, which is effectively closing the southern border. Now, that saw Dolomex take a hit on his comments, but Scheinbaum's response is not as clear as that. She says he's willing to work with the US to stop illegal migrants and drugs and crime and that sort of thing, but not that they're going to be closing up the border. But as I say, not that the market gave two hoots. If you look at Dolomex, that was the move right in there. And as you can see, we're pretty much undoing all the tariff stuff that we saw before, the jump on his threat of tariffs for that one. Kay, been saying it for a while now. This is the shape of things to come, isn't it?
Yeah,
throw some tariffs up and get people jumping up and down and coming to the table.
Absolutely, Ryan. This is what we are getting prepared for. And once we will know exactly what they will do or not do, or put in place or not put in place, there's going to be a lot more of these moves, I think, and on every tariff headline, dollar mix can go up or down 2 or 3%, and I think traders should all be aware of what can happen. Well, we've already had warnings since February of this year, of course, but it's going to continue until we find any clarity. But you know. I I don't know what to really think about it right now, because is Scheinbaum playing trying to play Trump's game in a way, saying that she will but then won't, which could anger the Orange Man, of course. So I think we're for sure not out of this story yet. This story is going to continue for months.
Oh yeah, absolutely, absolutely, and yeah, it's a little bit of a heads up, as we've been saying. If Trump says something that's effectively against the country, tariffs or whatever, you're going to see that currency of that country react. But then if it comes down to negotiation, which that's the whole aim of it, then you're going to see a reaction the other way, likely, if things get resolved. And if they don't, then obviously that's going to still continue whatever direction that currency has been going, weakening in most cases. So you've got a blueprint now moving forward. Mexico isn't out the woods on this, because this is just an immigration, drugs, crime thing. It's not the bigger trade deals. That's going to be the bigger bum fight to come, USMCA and all that sort of stuff. So you've just been given, though, a little indication of what's going to happen, so you know now how to approach it when trading these currencies. Canada as well, they've let's just say they've crept to the table. Canada's finance minister says that, first minister said after the first minister's meeting on Trump's tariffs, we agreed we need to work in a united and coordinated way in meeting this challenge. Now, this is just Canada ministers meeting, nothing to do with meeting Trump yet. They said, we agreed that we need to work hard to ensure our border is safe and secure and to crack down on illegal drugs. We need to reassure Canadians and Americans that we are on top of tackling the border-related concerns raised by Trump. So even though they haven't yet said they're going to do anything, they are looking at it and they are concerned about it. So again, he's got them all running around with their pants on fire, jumping in and out, wanting to get stuff done. Over in geopolitics, the head of Germany's foreign intelligence says Russia has started to use kinetic measures against the West, including acts of sabotage against infrastructure. He says Russian acts of sabotage may lead to NATO invoking Article 5. That's the big step up. So the escalation is still there. A deputy foreign ministry spokesman in Russia said that the Oreshnik missile launch, this is a thing they launched the other day, that Russia does not believe that time for negotiations has passed, but now it needs stronger means to make its point heard. So that's, again, an indication that they're going to continue using the big stuff anyway. Anything more you got to add, Kay, to anything?
On in general, there are two little things, and it's all happening, and it's in Asia. So first of all, Japan, they started their special diet session today. So we could expect ahead of the Bank of Japan that Ueda will be called to the stand and answer some questions about the policy, probably about the levels of Japanese yen as well. So it's not yet fixed the day that he will talk, but this means that that for sure we will hear from Ueda before the Bank of Japan meeting, so which is on the 18th or 19th. So that's one thing. And then secondly, for those following Asian currencies, Bank of Korea actually cut rates 25 BPs, which was a bit surprising as not expected. And it does seem that they have done it Well, first of all, for the reasons of for economic reasons, but also in part looking forward to when Trump arrives. So it's another example that the whole world is now looking out or looking forward to what's going to happen when Trump effectively takes the seat, because it's part of the reasons why the Bank of Korea reacted on their monetary policy. So that's, I think, an interesting one, even without necessarily trading it. This is something that we need to really keep in mind.
Yeah, thank you very much, mate. Right, well, what's going on? Not an awful lot going on this morning in markets. Just going to take a quick look at dollar CAD because that's hovering around the 140 level at the moment. Again, we had that big spike up and it's undone itself all the way since. So it's come back to test this 140. This might be a bit of a level if you want to get involved in today's trading. Now, probably for the next, well, maybe the next half an hour, we might get a bit of moves. And then when we hit the US, or what would have been the US session, it's probably going to quieten down an awful lot. So just be careful if you're trading today. If you're picking up, trying some short-term trades, you might find that you end up sitting in something for hours and hours and it doesn't move. So just watch out there. But there are some levels. But also, when you get days like today, when there's holidays and whatnot, look for any, outsized moves, any sudden surprising moves that take a pair out of kilter if it's not headline driven or something like that. Just the low liquidity. Sometimes you can get some funny moves. Then you can keep an eye on those and maybe try and profit from those sort of things. For example, if this bolted up to 140, 150 on the back of nothing, then that might be something you want to look at closely. Dollar CAD on this big level down here. Got another level down at this 75.80 area as well, which is a bit more of a longer term level if we get under there. But for now, it's still coming off this top that we had previously. Euro dollar, we're all messing around in this one for month end in our chat room. Everyone trying to nab a short up near the 106 level. We got up pretty high, 87, 88, and a lot of us were piling in yesterday. We've had a pullback, but look where it's pulled back to and where it's running into trouble around this 105.30 area. It was the resistance point. We had a couple of goes, couldn't get through, and after we got through, we held it. And now, give or take a couple of pips, we're holding it again. This would look constructive if we come through today, tomorrow, into Monday when liquidity is back, and we're still above 105, maybe 105.30. That would be constructive for a move up, most definitely towards testing this 106 area. It would also show that perhaps now we've got more of a bottom in place down here. It's looking that way at the moment, but I want a bit more confirmation of this 105 area. So if we come back below that pretty quickly, then we're in for a bit more sideways, and it keeps the downside momentum in play. So a bit more evidence that we're holding this zone, and then maybe we're going to get a bit of a push up. I'm going to do a little bit of a build. I think we've still got maybe some month-end stuff to come through from Europe and whatever today, tomorrow. But so we could be up testing this 106 again. But I think I'm going to do a little bit of a short build if we see a rally in the euro, because Eurozone is in a bit of a pickle at the moment, and the US is still going strong. So on the fundamental side, I'm still looking from the short side. I assume you're not still a buyer of the euro on the fundamentals, Kay?
Oh, no, no, no. No. Oh no, no. As I said, I have been trading the other side. I've been trading long because of month end, and although the reason would say people being reasonable would say we're doing our month end stuff ahead of Thanksgiving, and a lot. I reckon, has been done, but we can't rule out any latecomers because they will still be benchmarked on some London fixings and tomorrow as well. So we may see, especially in European hours, perhaps a bit of activity. I think we are, but it should be in theory smaller, but we can't, as you said earlier, rule out any stupid moves because there will be very little liquidity starting this afternoon. There will be very little liquidity. So if any latecomer still needs to do something sizable, the market could really be going one side or the other without really any reason at all. The models are what they are. So if there's anything sizable to do late, it may still be dollar selling. But then, yeah, especially for the euro, I think that should be it, unless year-end then kicks in. But I think for the euro, I'm still not a fan of the euro. France adding to already German issues. I don't think, we've been saying repeatedly here, that the ECB will be pushed to do 50 this time. But if central bankers let themselves perhaps influence a bit too much by politics, there is perhaps still this chance. But yeah, I'm really with you on the euro. I think sooner or later euro will start to weaken again, potentially after month end. Yeah.
Yeah, we've obviously got Eurozone CPI tomorrow, but if the numbers so far the others are to be believed, then we have got this rise in inflation that they've been predicting for the last few months, and that will probably stay their hand from going too hard towards a 50 side at the moment, because they won't want to risk doing a 50 and then finding out that inflation keeps rising into the new year, because that will test their credibility, their shaky credibility once again.
What could be an issue here is that the euro continues to weaken dramatically, and which would actually mathematically push inflation up, and then the ECB may be really in a pickle. But then that would be coming with the euro lower than it is now. I think we are still talking about. We are at 105. We are not at 0.95, right? Look at the last year's ranges. We are still historically speaking in very very tight ranges. If you look at what we've been trading between 2023 and 2024, it's been horrible for long-term traders. This kind of range.
Yeah, absolutely. And this 105 seems to be the key to it all at the moment, doesn't it, mate? If we get under that and start holding under that, then I think we do head back down towards those 103 lows, and people might get their parity calls.
Yeah, and that underline there, that lower line, if we start to break below there, it's going to be a bit traumatic, I think, for the euro. Yeah. But for the time being, in the shorter end, the 106 is still the one that I'm looking at, and secretly hoping that month end takes it up there, and to go short for a bit.
Yeah, and Ali, I see you're in there as well. So there's a lot of that's my only concern, is that there's a lot of people waiting to short this 106, which means if everyone pulls in, it does break. There's going to be a ton of stops above that 106.10. So we could have a bit of an acceleration towards 107 if it does break. So just bear that in mind if you're joining the queue to short up there. There's it's a big old queue, and the market likes nothing better than to take us and that sort of thing to the woodshed. So just be wary. Yeah, Ali, you're on that side. I've spoken about dollar CAD. You're long in that one. Yeah, I think you've got to be careful here with this 140 level. If it holds, then yeah, you might get a bit of a rally back up. But yeah, just be careful on this one down at these levels down here. Going to have a quick look at Aussie Kiwi, because that was playing nicely yesterday after the RBNZ. We did have a move down towards the figure. I've been doing a little bit of slicing of my shorts down here, just removing a few of the lower entries off and improving the average, but we have bounced back above. I was warning that I don't think we're going to see an outright collapse. I thought we might get a bit more if we held under 110, but we haven't, so we're climbing back up. So I'll see what this one wants to do from here as we pivot around this 110, 15, 20 level. Right, what else? Oh, I'm going to pass it over to you, Kay, because
I think it's month end, you know.
yeah, could be.
These up and downs we're seeing are month end, you know.
We'll have a quick look at the
Sorry.
Kiwi. No, go on, mate.
Yeah,
because it's not.
yeah. You look at the Kiwi as well. Tried to get back above 59, couldn't hold, but it's all happening into the hours and into stuff. Aussie as well, 65 the figure, still holding, still capped, but then now we're trading there again, so it may go a bit higher this afternoon again. It's all like trading the clock, you know.
This level.
And it's hard to know when to stop, especially when it stops, because as we've been saying, I've been saying like this Thanksgiving in between is really messing up the picture, because imagine that you have any latecomer. They shouldn't, but you know, I imagine any late comer who is really benchmarked at the last fixing of the month and needs to do something. I've seen stupid things in the past, you know, last fixing of an empty month, and all of a sudden dollar Canada also moves 150 points out of the blue because of that fixing, and is something really that I would warn people against, and especially against having two big positions right here and now. You may be right tomorrow, but all of a sudden today, or you may be right on Monday, or maybe you know after 5 p.m. Or tomorrow, you know. But in the meantime, the market's gone 60, 70, 80 points further than where you thought it would go. So I mean, that's my approach right now. As I've been mentioning so often in the room as well, I trade around the clock with my levels in mind, but also knowing that those levels are not sacred. They are just numbers on a picture. You know, they are not the market. A chart is not the market. A chart will move according to what the market wants to do or needs to do. In this case, needs to do. And so I'm really adapting my amounts, never put my account in danger on anything which happens now. Even if I have the right idea, I can still add to it come Monday or tomorrow evening, for instance.
Yeah, and it's important to respect the price action as well. You know, I've got a couple of little lines in here, you know, 65.10, 64.80, just talking Aussie dollar. And these are lines you might not necessarily trade off, but you can see they get action. So if you were long down here, these are the places you've got to think about taking profit if the price doesn't go through. You know, that's why I have these sort of little lines now. I may not enter a trade on them, but I'll sure use them potentially to exit or take profit on trades against them. And this 64.40 level, it's a real weird one. I've had it on my chart for quite a while, and it does go back. I think you probably need to go into something like 4 hour, but you can just see even on a weekly, you can see we've had these tests and touches down here. It's a weird old level, a weird old number to have such a level, but at the moment it's doing the job. We had that little wobble, but then the next time couldn't get down as far. Again, it wasn't one I felt like trading, but it's turned into a tradable level, and I think these are the sort of levels you want, because if you start to close underneath it, start to hold underneath it, then it's going to continue everything you've seen in this move, and then you know you're back down to these sort of levels. So that's why you've got to watch these types of levels, even if you don't want to trade them. They're going to have a big say in the markets. David wants to have a look at euro sterling. Yeah, not a lot to talk about in this one at the moment, mate. We've had a couple of dips under the 83, but it hasn't lasted long. We're sitting bang in the middle of this short-term nothingness that's going on here. So I've got no real flavour for this one at the moment, David. I would potentially maybe scalp it off the 83 if we get a test again, another fixed move, seeing what the driver is. But yeah, I've got no real feel for this one at the moment. I'm very neutral on this one. Have you got any view on this one at the moment, Kay?
Well, I was thinking that Sterling somewhere may start to feel a bit of the heat of that new government and uncertainties at the Bank of England and moving away from pure inflation considerations. But then realizing that it's euro on the other side, I'm not really tempted to go very long. I was actually, remember, and I just went out for like literally beer pips, and I was like, no, maybe not euro sterling, but it is. Ah, and again, I'm actually long cable just because of the month end, and we've been playing that pretty nicely. But I won't keep it after month end. No, I'm my confidence in the sterling is waning. I'm going to say. I've been for months and months. I thought that sterling was the better performer, but I'm starting to. My general feeling towards the sterling is starting to shift a little bit. So I'm not sure when or at which levels also, but it may be some kind of a trade that I'm going to put on for the medium term if I see some really good levels.
Yeah, I mean, just purely in this one, and probably from short term, I would be more a buyer than a seller at the moment because I'm the same view of you with the pound. And if the euro dollar can put in a bit of a bottom there at that 105 area, then maybe we see a bit of a bounce in the euro that won't be replicated in cable. So yeah, I'm with you, David. A little bit of a snipe maybe at 83, but I won't be putting a farm on it. I can tell you that. Right, Kate, all yours, mate.
Oh yeah, it's gonna be a short one today because it's gonna get a bit random for the next 36 hours or so. Um, Gold, yeah, I've done very very well to let some go in the 2650s, but then this little overnight move here in the dead hour that it took me out of the rest, and now we're back $20 higher. So I haven't got anything left, but I still think it's worth looking at it, especially now with Putin and the Russians again. Picking up some harsh rhetoric and potentially continuing to hammer Ukraine, even Kiev. So this could be one that just is going to continue. Still globally speaking, still could be one of my trades of 2025. Watching this, not watching, trying to accompany this thing to. Up to 3K or so. But yeah, it's just a long, medium term thought. Um, yeah, I'm still a deep buyer. It just in general. Silver is a different story. Even though we're bouncing a little bit again, look, we've tested the 61.8 once more, the underside of the box, and we're bouncing again. It could be enough. It could be enough, but I don't know. Looking at the underperformance of silver compared to gold, I would not be surprised if we get a little bit of a washout there and get down to low 29s or so, or even into the 28s. It's just I wouldn't be surprised. I have not added anything to my long-term longs because I'm trying to be patient and see what the market wants to do with everything, even over the next month or so. But I am placing a small bid here just to add to my long term, but it's going to as people know, I've been running this since I don't know 2018 or something, 19 that really long-term plan. So yeah, I'm just going to add perhaps a little slice. One that we've been talking about, the dollar Swiss, look where it held again. Okay, I said figure 20, dollar Swiss. Well, the bottom was what, 96, 97? Good enough for government work, as they would say across the pond. And it's holding again. All right. So this is interesting now. It's building on that support in the dollar Swiss. Okay. For the rest, yeah, I mean, we've spoken about all those levels. Aussie 65 the figure, trying now. Again, it looks like month-end stuff, same as Ryan already showed in the Aussie Kiwi as well. But I think this is going to be an interesting level come tomorrow after the fixings. Okay, for to really go, we need to break back above 65.5. But this could be good enough for decision time tomorrow once all the fixings are done, whether we end up above or below. Okay, and yeah, that 64.40 is an interesting one as well. Kiwi, we tried yesterday to get back above the figure, went up nearly to the green line there around. Well, we actually tagged it, and now we're shying away a little bit from it. Again, this is the zone 59 figure 10. I think after fixing times tomorrow, I would not read too much in any of the moves that we see now. Just keep an eye on the clock. I can't repeat enough when you trade month ends, when especially in an empty market trade, keep your clock really close to hand, because it may be signaling the end of some moves. Sterling, I'm still holding just a tad. I just hope that we get into this 127, 1020, 1030 zone towards the end of this week, where I will be a very happy profit taker on the rest that I have running from below 126. And really, that's about all I'm looking to do right now. Nothing really sizable, nor planning to hold much over the end of the month, unless, as I said, we get to that 106 in the euro dollar. I'm going to counter trade that, and yeah, we could go up to 106, 107, but that's why we keep our amounts in check, and not get too overexcited on any moves up to tomorrow 4 p.m. And with that, Ryan, back over to you, mate.
Thank you very much, mate. Good stuff as always. Well, I think we'll call that a day for today. It's going to be a bit of a quiet one. So if you've got a fence to paint or some grass to cut, might be a good day, good paperwork day nonetheless. But yeah, we might get some moves, but don't hold your breath. Anyway, have a great day, everybody. If you are joining us from the US, have a great Thanksgiving if you're into all your turkey gobbling and all that stuff. If not, well, go and enjoy yourself anyway. We'll be here tomorrow. No face show today or tomorrow. They're taking a well-earned break over there, so it'll just be me and Kay keeping you entertained today and tomorrow. So have a good day, everybody, and we'll catch you tomorrow.